What is a credit score? Credit score explained for beginners. Have you ever wondered why one person gets approved for a loan in minutes, while another gets rejected? The answer often comes down to one important number, your credit score. Whether you're applying for a credit card, buying a car, renting an apartment, or even getting a mortgage, your credit score can play a major role. In today's video, I'll explain what a credit score is, how it works, what affects it, and simple steps you can take to improve it. Let's get started. Credit score is a 3-digit number that shows how trustworthy you are when it comes to borrowing money. Think of it as a financial report card. Banks and lenders use this score to decide whether they should lend you money and what interest rate to offer. In the United States, credit scores usually range from 300 to 850. Generally, 300 to 579, core 580 to 669, fair 670 to 739, good 740 to 799, very good 800 to 850, excellent. The higher your score, the better your chances of getting approved for loans with lower interest rates. How is your credit score calculated? Your credit score is based on several important factors. The biggest factor is your payment history. Paying your bills on time helps build a strong credit score. Late or missed payments can lower it. The second factor is credit utilization. This means how much of your available credit you're using. Experts generally recommend keeping your credit utilization below 30%. Other factors include length of your credit history, types of credit accounts, new credit applications. All of these work together to determine your overall score. Like, comment, and subscribe for more finance tips.